Hello and welcome to this year's first Tech Thoughts. We're here with Inge Heydorn for our weekly market roundup. Today, Inge will be covering news in the software, semis, and gaming sectors. Over to him.
Thank you very much, Maria, and Happy New Year. I don't know if I'm going to be that happy talking about the marketplace, but everybody's seen it. The volatility is high. People are worried about inflation, higher interest rates. But one thing I would like to highlight, which is not highlighted enough, I think there's another leg to the tech sell-off, and that's the fact that a lot of people think that we have been overbuying a lot of tech, meaning we have a time of congestion going on that's going to happen during 2022 and drag down growth. I think that's right in some senses when it comes to products we were like necessary to have on the lockdown, like Zoom and DocuSign and so on. But in general, we don't see that trend, and our data points definitely not pointing in that direction when it comes to general demand. So I just want to make that clear. So going over to the semiconductor space and TSMC. TSMC is on the other side of the scale, as I just mentioned. They just said that growth will accelerate in 2022. Bear in mind that they also have a price component which plays positively into it, but also the fact that there are so many new products coming to the market, and the innovation speed in the industry is enormous for the moment, and that's not going to slow down, COVID or no COVID. On top of that, I think it's very interesting. They guide for 40 to 44 billion of capex, and bear in mind that the Japanese numbers are not fully included in that because it's a JV, so they only take 50% of it. So we're probably closer to 46, 47, 48 billion in spending versus 30 billion for last year. So really, really strong demand on the top line and good guidance for the same capital equipment names. So I think that's an area which is going to be very, very strong this year and next year also. So that's an area we really like, as you know. Going over to the software side, which has really been the sector that's been hardest hit here lately. Yes, a lot of valuations has been quite aggressive, but I think once again, go back to where is the marketplace? How does the business models look? And go to the companies with the best business models, proven track record and so on. Demand is there. And I think it's time to start to look at a number of these names again, like Salesforce, Workday, and so on. And the demand side looks really, really healthy. Looking at Infosys reporting yesterday, Wipro, all of them stating record demand for implementing digitalization. So they have to implement something, and it's the software we're talking about, and demand is healthy. So we're not worried on that side. And stay away from names with no profitability and really bit of unproven business models. That's our view on what we're doing. On the gaming side, it's a little bit mixed. Let's break down Q4, and we now got a lot of numbers going all the way into the new year. US really healthy, roughly flat year over year in Q4, and given COVID last year, that's really strong. Europe down 10-12%, which is not strong, which is slightly weaker than expected, and Asia roughly flat. And on top of that, we've also seen AAA titles which has not really performed better than expected. I would almost say a little bit worse than expected, and that comes to Call of Duty, Battlefield, and so on. So the demand side has been more spread out this Christmas than normal. The AAA titles has lost some ground, and the indie and the smaller titles has gained some ground. So that's a little bit negative news for like EA and Activision. On top of that, go into the name we like a lot, Nintendo. The Switch sales, I would say, are in line with expectations, maybe slightly stronger, but the software is clearly better than expected. A little bit more driven by third-party titles, but still very, very strong. So we expect to see a slight upgrade on software numbers again, and probably that they will keep their Switch sales numbers. So that's good news for Nintendo, which has been quite a lot under pressure also lately. So that was the first Tech Thoughts for this year, and you will see Maria and me next week again. Thank you very much.